Good morning. I hope it's nice wherever you are. It's 8 o'clock in the morning, Central Standard Time, 2nd of February, 2026. This is Risk Neutral Trading live stream every trading day from 0800 for the pre-market and the setup, and then all continuous throughout the cash session until 1500 in the afternoon. This is my virtual trading journal, so it's a little bit different than probably most streams, live streams, in that, again, I trade all day through the cash session because my commitment is to take no trades off of the stream. Now, I'm not a licensed broker or licensed to give financial or trade advice, but I am trading my own live account. This is my virtual trading journal. Everything that I see in my video is captured here in the video of this, and my voice or my narration here provides what I was thinking at the moment to the stream and the recording. So that's how this works. Again, I'm not licensed to provide trade or financial advice, and there's a disclaimer in the description here, so read that. I'm not funded, so I'm in it for the likes and subs. That's always good, and I appreciate it. Drop something in the chat, participate, that's super. And I stream in 1440p, so if it's not high def and clear on your side, use the gear on YouTube. Well, what are we doing here now? The numbers out this morning. We have the S&P. We have some numbers out at 8:45 and then 9 o'clock. We've got the S&P manufacturing PMI and the ISM PMI and unemployment. This is going to be non-farm payroll week because this is the first week of the month. This will be the first Friday of the month, and everybody that's alive and trades knows that that's the first Friday of every month at 0730 is a non-farm payroll, unless we have some more stupidness in the DC, which is not out of the scope of possibility. So here is investing.com. Now, this has been my oldest go-to setup, but they're changing stuff, and I'm rapidly not liking it. I used to really prefer the presentation here for screen snapping into Discord and stuff. You can filter this for any time zone, reports, whatever you're interested in. If you're living in Kuala Lumpur and you want to only follow the Nikkei, then you can do that. It's free. And you can tell by all the ads flapping around over here. And I keep it that way because my object or my idea is to keep all the recess sources that I use as accessible by everyone as possible. I can't do anything about Bookmap or IRT because they're paid, right? But in this case, I don't mind these ads. I don't like the way they've changed the format very well, but what are you going to do? These are the earnings for the day. The calendar. The earnings for the day are basically Palantir, and this little moon or the sun over here indicates whether it's released after the close or before the market open. Nothing I'm particularly interested in earnings today. I think Meta's Wednesday. We don't need that either. I think Meta's going to be on Wednesday. Let's see. Look at the earnings for today. Wow, big schedule. The other news source that I use is Financial Juice. It has a similar function here of a calendar. Typically, why I keep this one up as well. You see here, all of a sudden, Trump participates in signing time, singing time, signing time, whatever the hell that is. Okay, this is just come into the schedule in the last 20 minutes. And I really appreciate that because it's obvious to, I think, anybody that trades or follows the markets that lately any kind of opportunity that Trump or whoever has to be near a microphone is a potential risk for the market and for the auction. So I'm really pleased when they put these things in here, these events, and you'll notice that they're never in investing.com because it only focuses on traditional economic calendar events. So that's good. And the right side over here is more of a squawk box idea where there's kind of a ongoing running squawk box of what's happening through the day. And next we'll do let's get on to something more pleasing here. The pre-market. Well, here was our open. This is Friday's RTH. Here's last night's ETH. Here's the open. We just peaked above and we've been down all night. Now they've just come back over the open again. There's the so we are essentially, say 90% inventory short, and they just did make some of it back up over here. So whether that's going to have any impact or not, let's check and see. I don't know. Typically, I would suggest that if we had a short inventory overnight, that we would be looking for some responsive buying for profit taking. Now, that's kind of happening here as London kicked in about 2, typical. There's no real, I don't know. There's so much crazy news and stuff flying around. It's hard to keep up with, to be honest with you. Let me also start by, this is IRT, Investor RT by Linsoft. This is the micro ES, micro NQ, the ES market profile, and this is my micro ES high time frame chart or micro composite chart. I also plot the same configuration for the minis. But since I'm trading the micros live with my live account, and I'll explain why after a bit, I'm focusing on them. So starting with the high time frame, here is the micro composite chart, and you'll notice that in IRT, all of my charts in the header, you can see the instrument, the chart type, the periodicity, and the session. Kind of nice. This is an RTH session only. These are daily bars. Every place that price overlaps, I pull a volume profile around them. And where I do that, on the most recent one, I can generate the high and low volume nodes, which are just these green and red, marked by these green and red lines, and those values push automatically to Bookmap. Micro composite VPOC, etc. The session prices also push automatically to Bookmap. So what are we doing? Well, the market goes down to go up to go down to go up to go down to go up. And that happens because it's a zero-sum market. And that means that every time you buy something, a contract, there's somebody on the other side selling it. And depending on who that somebody is, how would someone that sold all these contracts to you down here take profit? Or on the other side of the coin, as you're buying merrily all this way up, who's on the other side of those contracts? And how do they make money? Well, they go like this. Now, this little white nub right here is where we're trading currently. We've been down here, as you see, we've been as low as 68, 64 quarter. And now we're back up here to 69.43. So that's damn near 80 points right there. Points. That's one hell of a move in the ETH. Let's look at the volume is pretty high, I think. Let's look at Bookmap. So this is the order book, the price ladder, the dome, whatever you want to call it. Essentially, it's just every price and the resting liquidity at each price. Resting liquidity. These are not trades. These are resting liquidity, waiting to be traded or not. the MC column, which is the high or low from my micro composite chart, just those values I put in. Now, last night when we opened, we were trading way down here. So as a precaution, I put this potential gap high up here at the previous RTH low. That's how I do them. I'll leave that on for now till I see where we open, and then, but I don't think we're going to open in a gap now. And these are the high and low volume nodes pushed by Bookmap, to Bookmap by IRT. Let's see if we have everything streaming along here. Just check quickly. Looks like everything's fine. Okay. This is the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. The RTH session, which will reset this morning at 8:30, fingers crossed. And this is my statistics column, which is pretty important to me. I'll talk about that in a second. And these are the session prices pushed from IRT to Bookmap. I share these with anybody that wants them, and a lot of people use them free, so no problem if you would. That would help you. It comes as a CSV file. You can, or CSV link. You can, from Google, you can drop in the Cloud Notes or wherever, and then you'll have these. I start pushing them at 1700 on Sunday night, continuously through 1600 on Friday. Just drop like, subscribe, drop something in the chat, and I'll hook you up. Here is the heat map and basically the Bookmap chart, okay? I don't use any indicators on Bookmap or IRT. And everything I do is just straightforward price, action, volume, and probabilities, or, statistics. Try to keep it as simple as possible. Works for me. So there's a POC for both the RTH and the full session. The full session's a bit more muted yellow. There is a VWAP for both Globex and RTH, and there's a mid for RTH. Now, the POC is nothing more complicated than the price at which the most contracts have traded so far in the session. So 69, whatever that is, 42 half, we traded 2,459 contracts. The minute some other price is 2,400 well, now it's 66, 2,470, say, or 68, that will move there. That's all there is to it. There is an initial balance high and low, which confuse sometimes because of the naming. It comes from market profile. All these levels really are, or what they really represent, is the high and low of the first 1 hour of the RTH trading session. So when we open at 8:30, this low will go below price, wherever that is, and the high will be above it. They will move up, they will move down as price moves back and forth. And at the end of the first hour, they won't move anymore. That's all there is to it. The rest of them are just as you would expect by the name. So let's do the statistics now, which are pretty important. The first thing I do is change the column title to represent the statistical open type for the day. And if we opened right here, right now, how would that open compared to the previous RTH close? Well, I think it's probably right there. It's lower than the close. And how does it compare to the previous RTH range? Well, it's within range because there's the previous RTH low. So it will remain lower in range again today. I typically change the column title every day to the correct one so that because when I do a screen snap or review the recording, whatever the stream, I know instantly what the overnight interaction was and how it related to the open. So then we clear the notes because we're going to do the statistics for today. All right. The statistics come from, I've changed my tabs around and tried to lighten this stuff up. Here's the statistics study in IRT, and you'll see that they conveniently highlight the correct open type as, and this was from Friday, because obviously we haven't opened yet. The study looks back at 1,667 trading days, the most recent 1,667 trading days. We opened lower in range 489 of those days. Of the days where we opened lower in range, price revisited the overnight mid 82.8% of the time. Overnight mid, somewhere right there, 82.8. Overnight POC, 80.8. It's now moved up here, but IRT hasn't caught up with it yet. Previous close is 74.4. We already know that's right there. IB high, let's look for the IB low. IB low is 61.3 because there it is. Okay, so we're going to go like this. We're going to go 61.3 IB low. I put those initials so I will know that that's what that statistic stands for, because the minute we open, this is going to be down here underneath price. Coincidentally, they could be aligned. Who the hell knows? But at this point, they're not. So I try to get this to make a little more sense here. Let's try to get these aligned just because this drives me crazy and it's a short trip. I don't have good luck dragging these things around, so it's just easier to do that. One more tick from the looks of it. Okay. And this is the value of the RT. Hasn't bumped up here yet. I've been changing some of these refresh rates and stuff around, and I have to see if it makes some meaningful difference. I was trying to reduce lags by recalc times. I may need to change the session prices around. I think I might have moved them back a little too far. So there we are. Let's see what else we have here. Mid, POC, value area low, overnight low. Overnight low is 66.1. Overnight high is somewhere. Overnight low is 66.1. Okay. Well, let's look at that, I guess. Yeah, maybe I've got the session prices all goofy. I might have. I mean, I didn't change anything. I just changed the recalc rate in IRT for these various statistics and indicators to try to lighten the load a little bit. Previous low. $63.2. Now, here's a good one. Okay, obviously, if we're going to get to 80.2, we got to get through 63.2, right? So these are statistics. These are probabilities. This is not hard, fast targets, lines in the sand, etc. All right. Now, I have to say at the very beginning of everything here today, Monday and Wednesdays now I'm off on the school run at 9, so that's going to throw a kink in the works. But yeah, let's see what happens. Let's see what happens here. Okay. So what's the next order of business here I need to do? I got to get all caught up here. And the next thing I'm going to do is the TLab snap, which is something I do every day. And it is, again, I've changed it all around. Let me just get this out of the way and then I'll tell you what that's about. The TLab is TLab is a it is a bookmap Discord chat room called the Traders Lab, and it is every day at 8:20. Every day around 6 o'clock in the morning, I post the reports, and then every day at about 8:20, I put this snap up. And it was created. I created this just to give everybody all the levels I thought they might be able to use. So that's that. And well, I tell you, that irritates me. We'll see. I really hope that all this stuff I did will help the having a lot of lag time, big time here on IRT. So hopefully I got a lot of that ironed out. Anyway, the TLab is a bookmap Discord chat room started by a guy named Tom B. And how to say this? Well, I've never seen copies of Tom's accounts. He doesn't trade live and he doesn't call trades, right? But he says he's been a professional trader for 46 years, and I believe him. Just having been around there for years now, I must say, I must be honest, I've never seen confirmation of that. I don't know that anyone has, but that's neither here nor there as far as I'm concerned. First, you're never solicited for anything in the TLab. What Tom says and how he, posts and stuff makes sense to me. And I believe that there's a good crew of people in there. So, I recommend the Traders Lab, which is the only bookmap Discord site or anywhere else that I recommend because I have experience there, and you're never solicited for anything and that I know of. And there you go. It's a Discord site. As I said, he doesn't trade live. He doesn't call trades. So up to you. I mean, there's some good people in there, and I'm not there hardly anymore. Maybe twice in a day. Reports in my screen snap. Just kind of tip my hat to Tom and the people in there. But I'm busy doing what actually he recommends, which is focusing on my journal, the market, my trading, and narrating the market and narrating the session, which is what I do here in the stream. So there you go. And yeah, thanks for stopping by. Smack a like, smack a thumbs up, smack a something. Subscribe, that's always a big one. Click that little bell thingy. Apparently that makes some difference. I don't know. Yeah, now, so let's get on with let's get on with the lead up to the open. Okay, so back to where I am. I'm listening to my wife go crazy out here for some reason. It's probably pretty important to be able to trade, right? So in order to do that with Bookmap, you need to activate the trade control panel right here. You need to select a method you will use to interact with the application and trade with your chart. Your mouse, Jesus. Chart, dome, or both. Chart, the only place you can trade with your mouse is this active data column. The dome, The only place you can trade with your mouse are the dome columns, and you guessed what both, I bet you can figure out what both mean. The next thing I need to do is, first of all, activate multi-brackets. Oh, and if you're using if you're sending your data or syncing with the Trade Statistics Journal in Bookmap, which I just figured out about, make sure you've picked the right live account, or whatever that you're going to be using journal. I do. I'm just figuring this out, so it's pretty interesting. Multi-brackets, okay? This is where I implement the risk-neutral methodology into my trading. The smallest risk-neutral package you can use is a two-lot, because it needs to be an even number of contracts. The next most important thing you need to determine is your stop loss for the package. And the first and foremost criteria that you need to look at is your account risk parameters. And this should be determined long before 8:26 in the morning. What instrument are you trading? What volatility? How many times, how many losses can you take in a row before you go broke? If you're trading with a prop firm, this will have all the benefit in the world to do with your daily loss limit, for example. Once these two values are established, then the first risk neutral profit target, or T1, is automatic. It's for half of the package, and it's for the same number of ticks positively as the stop loss is negative. Then you have the runner. The key is that when you've achieved T1, the worst that you can possibly do on the trade is scratch, unless you're a donut and you move your stop away from entry. And then you can pick any number of different, configurations and packages the way you want to set them up based on your account. I also make sure that I have activated my Execution Pro, because I have determined with backtesting that the most economic method for me to use is once T1 is achieved, to trail to entry. And so close. So what I've done now is I've got that all set up, the right journal, the right this, the right that, the right package. And you notice that I have my two-lot package right here. I don't need these tools in the trade control panel anymore, because I use the multi-brackets. So I can, and I have all the metrics up here at the top, which would be along the side. So I can click this button again. Stays green because there's the method selected to trade, and I get my real estate back. I have cancel and close, and we're set to go. Let's see what happens when it opens. And again, as inconveniently, but hey, it's life, I have to, I got a school run at 9, Monday and Wednesday. So we're set to trade. We're set to open. Let's hope to Christ it opens. And I hope my new, my newfound thinking here on the charting and I don't have the lags. Okay, we're going to open in about 2 seconds here. Let's see what happens. Well, that didn't work. That's disappointing. So that didn't change much for there. Got 20-second lag on me, so that didn't help. Oh, the best laid plans of mice and man, huh? This is so freaking frustrating. And that's completely stupid up here. You see that? I'm not even seeing IRT do anything over here now. Wow, 40-second delay, 38-second delay. That looks like it's worse instead of better. That sucks. Huh. Well, I didn't do myself any good here, it doesn't look like. That's really annoying. And I'm doing everything I can think of here, restarting it, restarting IRT first thing in the morning, and on and on and on. Okay, well, let's see what we get now. God damn irritating, boy. So frustrating, but it is what it is. I mean, it's a pleasure to have the tools, eh? Okay, so I've got I guess I've got a mess going on here. I don't know. Well, they're popping to the top, it looks like. Remember, IB high, IB low. I'm going to try to reset this stupid thing now. Yeah, I don't know. And why? Why is it popping up, you know? Did something good happen? Of course not. All right, so the first thing I'm going to do now that the session is open is slap a my top secret indicator over here. And that's called Blue Boy. Look at that volume. This is just a vertical line, obviously, which I can put on here so that I can make sure it's a visual cue for me. I can glance left, and if I see this blue vertical line or Blue Boy, I know that I have the full context in view, and that's my goal. Now we've got the IB high where it ought to be. We're right up here at the IB low again. Overnight low we didn't do. Let's find the overnight low. Oh no, wait, overnight high, I'm sorry. Overnight high is 51.7%. I put these in because obviously the overnight high didn't change, will never change now. But when I review the stream and or screen snaps or something, I want to have the correct values. I think that the overnight mid probably moved, but I'm not going to worry about it at this point. That's what that 80.8 was about. Okay, I've got to start thinking about the school trip here now at the same time as this is happening. Hey, Antonio, bon dia. Tudo bem? It's gotten a little warmer over here now. That's kind of nice, but apparently still cold in other spots. We're 7C here so far this morning. Monday and Wednesday now I've got a school run at 9, so that's pretty inconvenient, but what are you going to do? Life, baby. Life's what happens while you're making other plans, right? Last time, it's a new school and a new place, so it seems like it takes about an hour round trip now. Oh boy, look at them go. Taking those stats out one after the other. Oh yeah, there's a big reason to be excited, I'm sure. Jesus. Now, don't forget, we've got numbers out at 8:45 and 9 o'clock. It's the S&P PMI and the ISM PMI and something else. I forget what. Unemployment, I think. And this week it will be non-farm payroll. So, assuming that these morons don't go ahead with the government closure, I wish they would just take. My theory about this whole story politically over here is you take them all out in the field, line them up, shoot every other one of them. And boy, now you've got the undivided attention of those ones that are still standing up. And you will really you'll be amazed at how that will improve productivity. I am so sick of these people. And of course, nobody cares what I think, but it's just amazing. There we go. This looks like it's a little bit. I tried to, it seems like it's plotting along and pushing out the values okay. I've tried to increase still getting a 9 and 10 second lag, and I have no idea why. Session prices is the big one that I found over the weekend has the most lag time, but it's, I can't do anything about it. And especially when I push those data export. It is annoying, I'll tell you that right now. Well, the VPOC continues to march higher. So, there's that. There's that. Doesn't look like it's very, very well aligned here. The sun is bright. Boop, 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 boop. 5 minutes till that news. This is They've now changed the, first of all, they changed this one up. This is the economic reports. They're still pretty much the same, but I really don't like the new stuff. And they've changed the earnings now, too. Some bullshit over here about EPS revisions that you pay for or something, I suppose. I'm really getting fed up with this thing. I'm going to send these guys they don't care what I think. So we've had Palantir out, Disney. Oh, well, Palantir's out tonight. And that's got to be the biggest interesting thing. Teledyne. This week we've got some important earnings out. Not Palantir by any stretch. Those guys are a bunch of freaking thieves. AMD and Merck. Then we've also got, wow, look at the earnings. Oof, baby. Wednesday we've got Alphabet and Lilly. I think that'll take care of the sevens except for NVIDIA, which is not this week. And Friday's non-farm payroll. So let's see what other earnings we've got. Economic calendar this week. Well, non-farm S&P PMIs Wednesday. Thursday, light because initial jobless claims, okay, because it's going to be non-farm payroll on Friday. So assuming these morons in government don't, all decide to go play hooky some more. Jesus. And today we've got 18 minutes, so we're out. We've got two minutes or 3 minutes for the S&P Global PMI, and then we've got the ISMs out at the top of the hour. So, and Trump is now scheduled in at 14:30, so that's the random risk band, baby. Okay. And what are we doing? We're still lagging like crazy. All my great plans completely didn't happen. I don't know what to do there. That's pretty amazing. Seemed like we did better without. Guess I'll have to go back and change all those things tonight. Really disappointing, boy, I'll tell you. Quite disappointing. And what the hell is the volume about? Everybody's all excited about volume. Well, that does make some difference. It's 167% volume for this time of day. I guess I shouldn't bitch. And our ATR is 5 3/4 points handles in a 1 minute. So it's moving a lot, and there's a lot of volume coming down the pipe. I guess I can't complain too much. Then about all I can do. I don't know what else to do. Well, let's see here now. It's 44. We're going to have that news in about 30 seconds, or about a minute. I've got to think about what I'm doing next. Who's on third and all that stuff. Well, the levels have trued up. We're, just knocking them over right, left, and center, and the POCs flying to the top. So there you go. Opening range trade, that would have been a beauty. I coded that up over the weekend. So here's the opening range. It's within range, okay, and that is definitely would have been a fantastic trade. It's just a real simple deal that I've coded. I'm not going to load it up now, but I did it for backtesting purposes, and it was pathetic, of course. But then, last week and today, it's real simple. Once the opening range is in, 1 minute opening range, the first bar that goes out the top goes long. Stop is one or two ticks below the opening range low, and up you go. Same way with the other side. That's kind of what I see so many of these YouTubers that are all busy. Oh, about every 3 months they come out with this is the best opening range trade, blah, blah, blah. Because it's real simple. It's real easy to go back and cherry pick examples, and that's the way they harvest new subscribers. Interesting psychology. I found some information about that. And it's complete crap when you look at it statistically. It's a terrible trade. I mean, statistically, it's not profitable at all. But continue to look. All right, so if you're familiar with the stream, you'll know that I only trade statistically vetted setups, which means that I have identified a specific setup and the specific criteria to validate that setup as a trade. I've done backtesting to determine if it has a statistical probability or an edge or expectancy. And then if so, I take that trade. And then what the trade that has in that position at the moment is what am I doing here? Here we go. Is the initial balance trades. So what I do here is look at this thing lag around. That's there are the rules that are valid for the initial balance trade. It's a 2-lot risk neutral package. In this case, I've got it set up to trade something else, and I can do that with main over here. Obviously, by definition, there is no possible trade or rules until 9:30 when the initial balance is set, and there are only 3 rules or criteria. I call them rules because that's what IRT calls them, trading rules. So now this chart has nothing to do with the trading system or the trading rules, but it does have these custom indicators I built, which replicate exactly the levels in the system so that I can see if things are happening if and when I expect them to. Having said that, then I take this system and send it to this chart. And I'll get rid of this and this because it just draws lines everywhere. There we go. Now, when something occurs over here today, then there will be maybe a trade, maybe not, automatically. But let me point out first that this, I very intentionally do not want this sending trades directly to AMP and my live account. So this happens within the simulated IRT environment. What I do then for the forward testing is when I see the signals occur on IRT, I manually enter the trade over here with the setup and the multi-brackets that we went through in the pre-market. Look at this baby go. Well, that's one hell of an opening drive, isn't it? If you got on that opening trade or any one of these VPOC migrations, you're feeling like a rock star today. Good for you. That's great. I've got to get ready to start. Let me see. I can start the car from the phone, I guess. YouTube, go away. I listen to random YouTube stuff at night to go to sleep. About trading or, something. Astronomy or whatever. Okay, we've got the car running. That's a good thing. It's not cold, so that's okay. Pretty big thing during last week. Okay, so this is set up. Now, notice that the pullback and continuation zones aren't plotting over on today because it's not 9:30 yet. Once they do, then those levels will push across to bookmap and they'll bracket the IB high and the IB low. And if you had to guess today, here's old Blue Boy doing his job. See that? Oh, there's context. What would you think context is today? If you didn't say up, you better lay down until that passes because it's definitely an opening drive. Which I guess fits into my responsive buying plan from the pre-market. Okay. Oh yeah, let me start up some tunes in. I guess we'll do some classical jazz maybe. Okay, remember now we've got news at the top of the hour. We've already had our 45s out, and who knows what might happen with, random risk. I don't know. Got no clue. All right. Super high volume, remember, be careful. Look at that day. That's why, what happened between Friday and today that is so wonderful. I always find that amazing that people still think that this has got something to do with value and all this stuff. It's got nothing more to do with that than flight of the moon. It's speculation, baby. I firmly believe that. Of course, there's a different layer which are, hedge funds and retirement funds and stuff like that that are looking for long-term value and positioning. But a lot of the volume that occurs in the days, the markets that we watch here, is speculation. There's no question about it in my mind. I mean, just stop and think about it from your own personal point of view. When you put a trade on, are you concerned with the value of the S&P long term, or are you concerned with thinking that that thing is going to go the direction you traded? That's speculation. And maybe I'm completely wrong, but that's my take on it. And I don't know what to do there. Now, I'm not going to do anything now. I'm going to get ready to go. Got 3 minutes, so I'm going to turn it over to you, Antonio. Take it away. All right, school run is over. What happened here? They decided that that opening drive wasn't as important as they thought it was, or what? See, Antonio. Boy, actually, beautiful day here and good traffic. I'm kind of amazed. That was not unpleasant at all. So, all right, the school run is over. What's going on with the market? Still got the lags all ironed out, it looks like. Yeah, still a big up move. Did we? Doesn't look like we've taken an initial balance yet. Get my feet on the ground here. Well, we did take out an A. It looks like. So here's how the signals are supposed to work, and that is correct. We took out that at 940. Why aren't I seeing that? Oh, right there. Okay. Okay. Yep. Now let's see what we're going to do. We have a B. We should have had a B, but I don't see the B anywhere. That B signal doesn't seem to want to fire correctly. I don't know why. I'm so sick of that crap. What we don't have now is a trigger. Now, why isn't this B here? The A is fine. The B should be right here in this pullback zone. We come up here and get a trigger, then it's down we go. All right, so it doesn't look like I missed a whole lot. Not that that would matter, because it is what it is. How's our volume doing today? Now, well, it's down from 169%. And the ATR's dropped down from about 6, I think a high of whatever that was. I have an element in my trade plan. Never walk into the office cold and grab the mouse. You know, that isn't a winning strategy for me. Still quite a short covering, huh? Now it's kind of a problem for me, because assuming that we do take a trigger up here, that's a counter trend trade, absolutely, in my opinion. What is the trend? Is there any question in your mind whatsoever the direction it's going? I realize that in backtesting, the computer doesn't pay any attention to that. It takes the trades without discretion. The problem is, I think it's important to stay aligned with context. And I don't know how to factor that in or to code that in, frankly. Well, we're running up to the trigger again, and I really don't know what to think about this. I'm being completely candid. But one thing for sure, let's do a quick, checklist here. Got both. Okay. The right stats, account, all that nonsense is in place. Yes. Okay. All right. We can click the button again, get the real estate back. Everything's set to trade. Here's the dilemma. I don't believe it's at all common sense or good practice to trade counter trend. I also know that when I backtest, the computer, I have not been able to figure out a way to code in that context yet. So the computer takes every trade, the signals. And then I get the statistics and the expectancy and all those things. I also know that in real trading like now, by adding discretion, in other words, if I get a signal here and I don't take it, that is just wasting all of my effort for backtesting. Because the whole point of it is to backtest a system where you achieve, you identify and achieve, or you identify set up with parameters that has a positive edge, expectancy, and all those things, and then you backtest it over a statistically significant data set. I use about 500 days, which always yields over 1,000 trades. And if it proves out to have a positive expectancy, you take every instance of that setup that presents itself in the market, and you rely on the law of large numbers for your profit. The same business model as a casino, from the point of view of the casino. But it's really hard for me to, for example, if we come up here and tag this signal, this trigger, that's going to signal a short. And that's counter to what I believe the way to trade. That's a counter trend trade. That's picking the top and, all that stuff. So I have to stop and think about this here.
Order submitted.
So you see, I put my entry, wasn't hit. I would have been scaled, and now I'm standing here watching. But I don't have any. I do not ever chase. I don't FOMO. I don't, revenge trade. If I don't get that trade and I don't take that trade, that's what happened. Now the system went short. There was this trigger. And the reason it went short here was my attempt at trying to have some sort of context. And I'm doing that with wanting to have, down move with price. Trying to identify that. Now the VPOC continues to bounce up extremely bad. And I'm not at all disappointed that I'm not in this trade. Frankly, this is another problem. I don't ever trade so close. I've got to get some code, qualifying code built in here so that I never trade close to the VPOC. That's stupid. That's diddling in the middle. That's something that's a big no-no. So here we stand. And there we go. Would have been a, T1, we'd have the scratch. T1 achieved, and it would be going south. I just wouldn't all have imagined or considered that to be a proper trade setup, and that's a perfect example of why you should trade what you see, not what you think. And in my case, the machine is doing the trading, so I'm just watching this. Let's see how it pans out. So what happened here was I have this set up a little bit differently. But it took a scratch. It took a three tick lot right there. I have this set up for an experiment with something else today. I'll talk about it later. It's the same idea, it's just a different strategy. Let me correct that. It's the same strategy, it's different trade management. I don't think any of these are good signals here. I mean, this is terrible price action. Volume is high, but we're just, you know, obviously we had the opening drive and that was where you needed to be on. This is now just a cluster up here, right around the POC, in my opinion. And I'm sure there's somebody that's got a great way of trading this. That would not be me. Kind of disappointing. I didn't get this. I didn't get filled there. Short. I would have been to scale, and then, you know, now you're feeling like a regular rock star down here. But what are you gonna do? I figure if I don't get filled when I sit there with price coming past me and right to me, then that's the way it is, and I'm not going to chase it. That's for sure. Well, that's just, you know, what, you know, a second, 2 seconds late. Had I been right here, I would have filled. Well, what is that? Let's see. That's 52. Is it? 2503. 58, so 2 seconds. 2 seconds or 3 seconds sooner, that would have been a fill. I'm thinking that this Monday is going to probably not be too opportune for me going forward with the school run right at 9 o'clock. And I mean, that's not a problem at all. And again on Wednesday, I don't know about that. Just thinking out loud here. You see the fallacy of these of candlesticks? Oops. So here's today's trade, right? If you look at this, look at that candlestick. When I look at it, it looks like, wow, there's a lot of volume selling up here. Yeah, there's a lot of volume, but these candles have nothing to do with volume. It's the open, the high, the low, and the close. Or, in this case, the open, the high, the low, and the close at this moment. And that's where it is. Having nothing to do with volume. And watch where the naked volume point of control is, which does have to do with volume. Way up here at the top. Those are actually deceitful. That's why I don't like looking at them. I only use it for this high time frame daily bars thing, because volume doesn't, who cares? There's the volume profile. This is much more meaningful. That tells you where this trade is. Value area is right up here at the top, flat on the top. We don't have any excess up here. That tells me this auction isn't completed to the upside. And all the volume is traded up here. Look at that migrating VPOC. Just, you know, and it's of course the same. Of course it's the same. Easily analyzed over here, making sure that you've got blue boy so you have the whole context in view for the session. You know, migrating VPOC and all the volumes up here at the top. And look at the developing value area high. You know what I'm talking about? There's no excess on the top of this thing. And a high volume node up above us, so I would assume they're going to get through there and head up, would be my guess. That would be my guess. Now we still have an A to the upside. That's the first rule. The next would be a B, which would mean trade up here to the continuation zone and pull back to the trigger. And then up you go. Remember, these are just levels that I chose because of their special qualities. I gotta start maintaining that, man. Look at how many times this level was support and resistance right here. Again. Look at there. And the joke of that is those levels are just arbitrarily decided upon by me as a place to start. Having no more, unless I'm just, you know, really lucky and picked some of the most fantastic levels in the world, which okay, maybe. What I think that means is, I think that plays right into the trait that's famous. and that famous within humans, and that's pattern recognition, or whether there's really a pattern there or not, and conformational bias. It's like Fibonacci, you know, all those. Oh, look at that support level. Look at that support. You can do the same thing right here. Look at this support. Look at this resistance. That level is no more, you know, that's a Billinacci or a Buminacci. That's a Buminacci level. But it's amazing how every day I notice that. Every day I try to comment on it to point out the potential fallacy with all these levels and all the stuff you see by the internet gurus. You know, it's like the opening range trade. About every 6 months they all come out with a new opening range trade, and they do that because it's easy to cherry pick good examples, chart examples, and that's how they get new subscribers, because people that are experienced and have done it once, they know better, you know. But the new people that think that those internet people or gurus or YouTube people are trying to really help them fall victim to it. For a lot of volume, this market's just kind of plugging along, isn't it? Pretty strange. Oh, there we go. Now it's popping. Ooh, and we got a B now. There we go. So if we pull back for a trigger, then Bob's your uncle. Trigger would be here. Oh, they're not going to give me a chance. They're not going to give us a chance. Doesn't look like. Wonder why that thing is taking so much lag. Shucks. That's disappointing. That's the magic of trading, you see. The magic of trading. What we needed to do was have this, we pierced it. Right there, we needed to have a trade down to the trigger and we'd be on that. I would be on that. I hate that. I don't know why I keep doing that. No we involved. Well, thanks for coming through the stream. Drop a thumbs up and a like. That's always great. Subscribe. Drop something in the chat. That's really good because it's a lonely business, right? I'm standing here for roughly 14 hours every day. And yeah, it's always nice to interact. However. Oh, man. Now there's excess on the top. And there's... the auction has, come up here to a high volume node in the micro composite. And that bit of... we still have some liquidity lying around up here. We got 70... in the 15s, we've got 300. Well, we did have. They heard me and ran, I guess. Nah, son of a gun. Son of a gun. I don't know what might be precipitating any of this. No. Okay. Yeah, so there's something that was not anywhere in the news. That's why they're getting some bumps, I guess. Good for them. You got to be ever so careful about the random risk these days. It's just nothing like anything we've experienced before, I don't think. Yeah, now what? Now what are they going to do? We got that excess on the top side, so that's a little bit spooky now. I'm not saying that anything's happening to precipitate a trade, but I'm anticipating, if this price comes down to this trigger, that would be a long based on the system. A, B, trigger, and you get one of these little trigger guys up here at the top. Boy, I tell you, look at these levels. Look how these levels, how powerful they are. And here, all across here. It's real easy to see how easy. Let me start over here. It's amazing to me to see how easy it would be to mislead people about something like these levels. And again, these are just levels that I came up with Rod. I'm going to start, the conversation is, I'm going to develop rules for an IB continuation and failure. And then I'm going to code that up and I'm going to backtest those. And I can change these values, I can do whatever, but that's where I'm going to start. We agreed that that was about the right place to go, and that's what it did. That's as scientific and as mysterious as these levels are. Yeah, boy, look at there, huh? And look at this one. Here. It would be so easy to convince people that was, especially new traders, that this was some kind of magic crap they needed to pay for, I think. It's really too bad that happens a lot. Boy, would it be nice to be on that long, wouldn't it? Or if you were really clever, you tell her in a real good rearview mirror person, you tell everybody you got the opening range trade and you're still on it. Which happened. I know of people, actually Hogue, if you know who he is, he's an old floor guy been with Top Step from forever. Every day they put or just about every day they put a opening range trade on, and then they hold it until it stops or the end of the day. So today they're up lots of points. Opening range trade would have been right there. So 50, 12, they're up about 60 handles on that trade. And that's legitimate. I mean, it's a legitimate trade. The only thing that can be a real adverse situation that, people like Hogue don't worry about because they're trading funny money with a prop shop. But If it's your bank account, you need to look at your account risk, because what is the opening range? The way it works is you decide what candle is going to be the opening range. Let's pick up the first 1 minute. So if price breaks above the first 1 minute, you go long, you know, and a tick or two or whatever however you set it up. If price goes below the 1 minute first, you go short. Assuming that you go long like today, so it went long, and then you put your stop below the opening range low. Well, if that's 50 points, you know, you have to be sure you qualify the opening range meets your risk parameters, and then you're okay. And I've coded that up, actually. I've got something that does that on my IRT for backtesting. And it's a disaster, by the way, long term. And this is disappointing. Could have just come down here. Couldn't you? Just a couple more ticks, please. And then, oh no. Oh no. There you go. Opening range 42 to 56, so that's fine. That's about 12 handles. Still a lot. There's the first candle. There's the first penetration up. You go long, stop is down here short, and you're still in it till you get stopped to the end of the day. Or and if you want to start, you know, bringing your stop up below swing lows, you can do that. Trade management's a whole other conversation, but that's the opening range trade. And I have it set up with a trading system where you know, so many ticks above and below for the stop and blah, blah, blah. Qualify the opening range trade so that if the opening range is wider than how I have it set, then it doesn't take a trade. You know, those kind of common sense things. One problem with that big breakfast, I think I'm related to a snake because I get mighty sleepy. I will take the trade because of my commitment to do so, but it's, you know, when this kind of price action goes for a while and we start approaching the middle of the day and all that stuff, I lose a little bit of confidence in what's going to happen. And that's something else I need to work on with the backtesting. Quantifying it within time frames. We use the RTH 1, 2, and 3, which is something Rod came up with, I believe. And it's just, you divide the 200 or 450 RTH session minutes by 3, and that's what you get. Yeah, 450 minutes, right? And that's the RTH from 0830 Central until 1600, and it's the the full RTH session, not just the cache. I'm gonna go refill my green tea glass here, so the minute I do that, be sure and know that it's gonna fly down to the target or the trigger. Did they do it? Well, no, they didn't. That's unusual. Oh. This big low volume zone here is not not making me all warm and fuzzy. That's for sure. Getting down through there though. Kind of expect this thing to thunder through here, right? Thunder through this low and down here somewhere towards the POCs with a high or something. I'm going to put a filter in the basic initial balance trade tonight and run the back testing. Just thought of that. The way I approach this from a systematic point of view is first of all, I don't change anything. In order to develop a system systematically, if I'm standing here thinking about a rule to do with time, I was just talking about, okay, so I'm wondering what the change in outcome would be if I, for example, I only put trades on in RTH 1. Well, the only way I know how to do this systematically is I have coded up, obviously, the typical full session based on, RTH and cash, or IB and cash, and I can run that back test. Then I make the one change with that filter so that it just filters out, only allows trades to enter during the first 90, RTH 1, and then you run that back test and you see if it's, favorable or an improvement or not. That's the only way I know how to do it. It's just like I want to know, do I want to have that low touch the trigger or the close below the trigger? You know what I mean? Those little kinds of nuances, and the only way I know to do it is to run a back test, and then make the change, and run another back test and see what the difference is. And that's the way I approach it. Boy, price just fell on its ass. No movement at all. Got no lag, no action. And there we are. Same thing. It's hovering. Again, those price levels, whew, those levels I have are so powerful. I gotta stop joking about that, because if somebody just comes floating through here and hears me talking like that without the laughing part, they're gonna think I mean it. So if you look at this on a smaller fractal, what's happening now? Lower highs, lower lows. And price, the pace of the tape fell on its ass. Volume is still a little bit elevated for this average. Looking back over 20 days, by the way. But look at where we are now. We're down to two points, the average ATR. From whatever that was, 5.5. And don't forget we had this day before yesterday, Thursday. This was Thursday. Boy, look at that support, huh? Wow. How about here? Something's wrong here. There's a data problem right there. You see that gap? This is open. There's a bar. There's no close. What's this all about? There we go. Filled in. Well, it's fast approaching the bottom of that witching hour here. Something that is really important to understand, I think. Let me see if I can find it quickly. If you're approaching trading as a business, as I am, as am I, I'm not. This is not video game gambling. What do I think? A hunch here, discretion there. I'm approaching this as I believe it's meant to be from a business point of view with probabilities and statistics. So what does that mean? Well, it means that a lot of the time, the vast majority of the time, there's no trading. Am I hurry, scurry, and blurry? No, I'm anticipating. Okay, I've anticipated that, well, I've achieved one trade. And now I've got the second signal. Do I have the third? No. No trade. If I have the third, trade. Very, very unlike 99% of the traders, and I think that's why 99% of retail goes broke. They don't appreciate or approach the market that way, and they don't approach the market with a full understanding of risk management and what risk they're putting onto their account risk. So I try to do both. And no matter where you were born or raised or however, most people were raised with some sort of work ethic, which, you're standing here in front of these screens, you get all this money invested in desks and monitors and blah, 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 blah. And boy, I better be trading because I'm standing here. No. That couldn't be further from the truth. And that's another big problem that a lot of traders have. They figure that their reward should be commensurate with the effort, just like it is. You dig a ditch, you go to work every day, whatever it is you do. Absolutely not the case with trading. Well, they're going to run that damn thing back up there again without me. Isn't that something? I don't know why they're picking on me. I'm a nice guy. I don't have FOMO. I don't look at this. How would you think you should be trading here? If there's any question in your mind what the context is, you need to put the mouse aside and just think about this for a minute. Higher highs, higher lows, straight up. I mean, there's been absolutely no few tick pullback, huh? Which is perfectly normal, but there is no question that this market is trending higher today. Right over here, it's opening drive too, right out of the gate. Boom. So, do you think it's a smart move to try to pick the top and short it? I don't. Well, it looks like they're intent on just sticking here on that level. Okay. It is what it is. Trying something new here. I'm going to close these these charts that are sucking up so much room, and see if that helps. There you go. Did miss my opportunity right there. Wow, that's too bad. Well, that's disappointing. It never fails, though, does it? The minute you step away, bam. Obviously, in the real world, this trade would be managed below these pullbacks. They're never let it come back in your face, but it's a perfect entry per the system. A, B, trigger, exactly. And then actually, the trigger entry in my world would be right here. If I took it manually, what the system here is doing is waiting for 2 bars in the direction of the trade. So that's why I took an entry up here. I waited for this bar to go red, green, green, boom. And the stop trailed up here after this T1. That's why there was no stop here. I can actually change that, I think. Wait a minute. Okay, then don't be nice. I don't care. I can show the targets, T2. There the targets would be. Why I took T1 there, didn't get to T2 yet. Or if, unfortunately, you can only show, this was built a long time ago by Chad Payne, this indicator, and it only deals with with a 1 target and 1 stop. So I'll show you what I mean. Or I've only been able to figure out how to do it this way. Let me correct that. So there's T1, and there's T2, and there we are. And I leave them off because there's lines all over everywhere, all over the place. I'm going to have to do some soul searching here and figure out how to just contain any of my other activities in the day until 3. That makes for a long time standing here, I'll tell you. Because I start here at about, what happened there? I started about a little before 6, you know, so. So the live stream is 7 hours every day. So that I'll be looking at about an 8 hour stint here. But you know, having missed a trade like this, when you approach trading as I do, where it is only vetted, structural vetted trades, which I have, concluded pretty well before the fact that have a statistical edge, they don't happen all the time. So, like, I'm real disappointed. I certainly didn't overtrade anything, and I'm not upset. I didn't trade anything. But when you have a trade like this, it's that you're standing here watching, talking about it, and then it gets up here and you think, oh, well, the hell with it. Okay, I'm going to step away. And then this happens. That's, you don't want to miss those opportunities. Not that, it's a real fine line. You have to use structured, specific, have to be able to use structured and specific signals and have your rules defined for your setups, because it's real easy, as I was saying earlier. The human is a real prone to seeing patterns where they do not exist, and looking for confirmation bias. So when you're in a situation like I am, where I trade absolutely specific rule-based setups, then I need to be on the job. Really disappointing right here. And I'm not going to be able to not take our daughter to school, but that's Monday and Wednesday. So we'll just see how we go. I might need to ask my wife if she can up the caffeine a little bit. Up the coffee. And yeah, so we'll hang on here until 2 o'clock, and then I'll go through the backtesting story and do the whole shtick as usual. Backtesting and how I approach it from about 1400 here, and then keep an eye on this trade while that's happening, and a market recap at the bottom of that next hour, and then market on close imbalance at 1450, and that takes us into the close of the cash market at 1500 when I close the stream every day. Another VPOC migration. That's a sign of, that's a good sign for continuation with this trade. I mean, means that volume is, or value is. Now, there's a difference when I talk about value of the S&P and the POC. The POC is the price, most traded price, okay? What does that mean? Well, it means that this is the price that most traders today, at this moment, think is a good place to trade, execute, do business. So I don't believe that has anything to do with their opinion, the long-term conviction or not about the value of the S&Ps, but it has something to do with the trade of today. Well, I'm guessing somebody said something. It just cratered down and took the stop. Look at that. Yeah, that's got to be some news or something. Let's check what that might have been. Oh, they're not going to release the non-farm payroll on Friday. Wow. Wait a minute here. That can't be current. 11 o'clock this morning? What that got to do with anything? Well, the ORA estimates are out, but there's nothing in the. I don't know. Well, that was a big hit for some reason. Huh. And now back over again. They don't look nearly so dramatic when you watch them on a Renko. Hmm. Okay, let's see what's kind of trouble I can get into. The backtesting story here, I guess. Well, I guess first it's important to understand that I approach this differently. Oh man, differently than a lot of people. And the way I believe it's meant to be approached successfully, and that's as a business, not as a video game or as gambling. And this is just what I have come to understand are the methods used by the most successful hedge fund and traders in the world. And that's, Jim Simmons and Tom Sosnoff, Tudor Jones, and Mark Douglas, whoever, pick one. Tom the Trader, pick anybody you want to pick. They all came to the conclusion that this business is essentially a random environment, and the outcome of the next trade is 50-50. That's absolute. That's a statistical fact. I mean, the market can only tick up or tick down. It can't go sideways, horizontal, backwards, anything else. So it can only go up or down. It's a 50-50. It's like a coin flip. So given that you accept that, or that I accept that, then the way they approach trading and that I am trying to replicate is to identify a pattern that occurs frequently, a setup, the rules that or the parameters that would justify an entry for that, and then you code that up or somehow you backtest that over a statistically significant data set and determine if it has an edge or not. Expectancy, positive probability, whatever term you want to use. And if it does, then you take every one of those trades that present themselves in the live market. And the idea is you rely on the probability, that percent of probability, and the law of large numbers to manifest that account, that probability or expectancy to your bank account. That's why you hear them talk about trade often, trade small. You can, trade small or go broke. The idea is you want to amass a large number of occurrences because that's what will manifest that edge to your bank account. It's also the business model of a casino, which is you probably understand is profitable. They play no game that they have not pre-identified an edge. On the casino floor, their only mission in life is to play that game as many times as they can in 24 hours. That's why nobody's emotional. They don't care. Their only mission is to play the game. Sure, they're watching for cheaters and they're doing this and they're doing that. I mean, I'm oversimplifying it, but not really. The fundamental principle is the same. Their only mission is to acquire as many occurrences of that game as they can. And the law of large numbers manifests to their bank account, to their bottom line. Now, most traders don't do that. Most traders are whipping and spurring and gunslingers and betting on this. And if the girl with the big boobs says, "Oh, I think you ought to go long," whatever it is, that's how it works. And so I'm trying to be the house. I am trading from that point of view, and that's, as I said, that's the methodology that the most successful hedge funds and traders in the world came to realize was the way to go. So that's what I'm doing here. And I'm doing that this way. Now, I have determined that the initial balance trades, it happens every day, right? Very clear. I've identified basically 3 rules, including the initial balance statistic, that validates my trading system. And the initial balance statistic that I use is a little bit more complicated than the normal. Well, the price took out the initial balance. I want to have price moving in the direction of the trade. For example, this A right here, price is moving up. The previous bar opened lower than it closes. Then the signal bar opens low, crosses the IB, and closes above. That's a little bit different, but that's what I do. I've identified those 3 rules, A, B, and trigger. That's it. Now, I missed this one because I've already talked about that because I'd stepped away for some lunch. So I've identified those three rules and I've coded them up here. Now, this is a little more complicated maybe than needs to be for sure, because the basic trade management and trade entry rules and stuff are here. The rules are here. And these include some of these things to do with the flags on the chart, which on this chart over here that I used to verify, visualize what's going on. So given the setup as it is, then I can take, and the way I set them up can be different all over the place, but in this case, it's a 12-tick stop, 12-tick target, 48-tick T2. There's no break even or trail up. So that's a basic, straight up, original risk neutral trade package. All right. Now, set up the back test. This is, I was doing this last night for January. Let's look at, oh, why not? Let's look at January. Let's see what how January would have been. Now let's do, this is, I think, a little more impressive and a little more correct as far as statistically significant data set. Imagine if you had to go back through every trade on every chart and identify that these three rules happened exactly the way they should have per your rules, and you want to go back 500 days. Think about that a minute. It's impossible as far as I'm concerned, but I can backtest it right here. And there you are. There's 498 days. 223,283 1-minute candlesticks. It took the computer 9 seconds to do that. It evaluated every one of those 223,000 bars, 1-minute candles, and it evaluated every one of those rules each time. So there's no possibility you could even remote. This is the only way I can see to do this at all efficiently so that you can, get somewhere, I think, as a trader. Now, these are the reports that you can, set up, various ones you can have generated, and these are the ones that I like. There's the trade. There's the profit. There's 1,058 trades, 537 long, 521 short. Average capital required, maximum favorable excursion, maximum, this is overall, maximum favorable excursion daily is 322, maximum adverse excursion daily is $150. And on a trade basis, the way to really get the stats is there's 407 winners for an average of 67.15, and there's 257 losers for an average of 29.42. There was 11 winners in a row consecutively, and there's 7 losers in a row consecutively. You can take however many trades that is, 1,058. This is a really important report, I believe. This is every trade, every one of the 1,058 trades right here. Exactly the entry time, the exit time, the trade, it's the signal, the exit, T1, T2, whatever. There's long, SST long, there's T1, T2, and there's the outcome of every trade. And you can go back. You can also send these to the chart if you want to. Now, that's the only way I know to find out and to determine intelligently and systematically whether you have an edge or not. I think I've got, this is a great deal. It's a structured trade. I had 4 winners in a row last week. Well, excuse me. You need to have at least 1,000 trades, a minimum of 100 trades, in order to have it be statistically significant. And what do I mean by that? Well, you need to be outside the possibility of random distribution. Everybody knows a coin flip is 50-50. Nobody's surprised if you flip a coin 10 times and there's more heads than tails or vice versa. That's random distribution. Flip it 1,000 or 10,000 times, and you're going to be pretty close to 50-50, I believe. So that's how I approach this market. And then this is how I watch these trades in real life. Now, this is trading today's market within the simulated environment in IRT, because I don't want this being pushed to my actual live funded AMP account, funded by me, my dollars over here. The next step with all the back testing is to, what I do, you can do whatever you want. Here are all the back tested. Each one of these lines is a back test. 495 days, 1,064 trades, 575 winners, etc. Right? Now, what I was doing here, I do that continually, and last night I was playing around with some different stuff. Here is, for example, the trade we just did. There's a micro, 12.48, 2, no trail. Oh, that was in January. Oh, okay. 37 winners, 15 losers, 64 average winner, 8 losses, 30 average, 8 losses, 56, 46. Win rate, expectancy is $20, 1.3 R factor, and on and on and on. This, you have a vetted trade or not. If this is upside down or these numbers are negative, you certainly do not want to take that trade. You don't want to use that methodology. Let me see one that makes more sense here. Where is one? Well, some of these I haven't messed with for a long time. Here you go. Here's one. So there's the basic package we were just looking at. 495 trades, 916, 332, 74 losers, 231. There's 55% win rate, 21.53% expectancy, or dollars expectancy, 1.25 R factor, risk reward, profit factor, consecutive winners, losers, and there's the profit. Pretty much the same as we just got. Now, I've also done some stuff where I add a break even, and I've determined that is the most, that'll increase the profitability by a few $1,000s. And that's right here, for example, would be one of them, where we have a trailing, oh, that's the wrong one, sorry. Right here, where we have a trailing stop. So when we hit T1, when price hits T1, that's, takes that profit, and then it trails the stop to break even or to entry. And that is one of the most profitable. This was on January, so that's how I do it. And then I have a, sizing where I actual trades vetted where I size up from micro to mini, systematically driven by real data. So there you go. I'll do the market recap, the bottom of the hour, and then we have the market on close imbalance at 1450, and we'll wind this up at 1500. Have a good one. I'll be right back. And let's do the market daily wrap up here. Should be pretty flippin' obvious what happened today, I hope. Overnight was pretty, the ETH was kind of down most of the night and then pulled back some of that ground up here to the open. I had mentioned in the pre-market that I was looking for responsive buying to take back some of the, some of the profit that was pulled in overnight, and we were about 90% short inventory all night. And this was an opening drive that was pretty breathtaking. That's like 60 handles. Now, obviously, nobody gets to bottom, but there's say 45, and the world famous 6945 number that's been so prominent as of a level. Look where we were when we opened. Pretty crazy. And up we go. And then we just swapped them and traded them out up here and for the balance of the day. Whatever this deal here was, I don't know. I'm guessing news. And I'm glad I wasn't in it. But there you are. That is essentially the trade so far today. Now, this is a full RTH session only. So this is Friday's RTH session. And see that the ETH mid was only here. So the low was way below us. And boom, off to the races we went. Quite a day, actually. If you got an opening range trade, you're a pretty happy camper. So this is my high time frame chart, and that's RTH session only. I guess it's worth repeating that this is IRT book map. I am currently trading the micros. So I went through that a minute ago about how I'm built, how I systematically switch from micros to minis. Scale up. These are the minis, or the micros. I have the same configuration for the mini. And this is a Renko chart, NASDAQ Renko, and the ES, M micro ES. 1 minute or one daily candlesticks. And wherever price overlaps, I pull a volume profile around them. So here was Thursday, Friday, today. And that will generate the volume point of control and all of those values that we watch in Bookmap. This is the market profile chart. So there was Thursday, Friday, and here we are up here today. What might happen? Well, I don't know. Typically a P shape, they say, is short covering, so that makes sense. And we're still in earnings season, so that's something to watch out for. Google, or Alphabet, I guess they are, is Wednesday. I'm not sure what else is. We'll look at that in a minute. What are we doing in volume here? We have toned down the volume a bit, I believe. Down to 93% a minute ago. At the open, we're at about 160% volume. This is over 20 days compared to average. And we're now at 2. Whatever this was, when it dumped at 1400, they jumped all the way up here to over 4 handles per 1 minute bar. Whatever that was, it was who knows? I mean, I don't know. And green across the board, about normal volume actually now. we're at a typical day is about 1.04, 1.03. So, huge volume in the beginning, and then now less than 100. So it's going to wash out. It's going to all come out in the wash pretty much. The next thing to pay attention to here is my news sources. Now, these are free. That's why you see all of this ads going everywhere. And I keep them that way for a reason. So that anybody that's following the stream can have access to as much of the stuff as I can. There's nothing I can do about Bookmap or IRT, but these news things, like investing.com and Financial Juice and stuff, you don't have to pay for them. All the data, the same data is right here, no matter what. Now I like Investor RT or investing.com because it just reports real news stuff. And now bear in mind, we're not going to have the non-farm payroll this Friday. They've figured out a way to weasel out of that. So it's pretty disappointing. We got Jolts tomorrow at 9 and Bowman speaking. That's not a big one. The Jolts report at 9 o'clock is a fairly good sized number. You can filter these for wherever you are, whatever you need to do. And they also have earnings, which is pretty handy. So here's earnings for the week. There's Monday. Palantir is going to report after the close. Oh, oops. That doesn't make any sense. How can that be for the week? That's just for Monday. Okay. This week. Lots of earnings. Tuesday, AMD and Merck. AMD is going to be a pretty big one. And then we've got the alphabets on Wednesday, if I'm not mistaken. Wow, look at all this earnings. Holy smokes. Yeah, we're in the thick of it now. So that's this investing.com. This is some new crap they've added. I don't know. We're going to sell you something new here. Yeah. Okay, great. I'm so happy for you. The other news source that I use is Financial Juice, which is similar docket over here, a calendar feature, but I don't like it as well to copy and paste in Discord or wherever. One thing that Financial Juice does that investing.com does not. They don't pull any of this random stuff into the calendar because it's got nothing to do with anything financial. However, everybody now realizes that anytime these kind of things come up, they can have a huge impact on the market and on the auction. So I'm real happy that they pull this stuff in. That was at 14:30. So that's not that is not going to affect my trading at all. And then over here is more of a squawk box idea. You can see where Trump said something at 14:17 and said something else at 14:16, and you know what I mean. There you go. More of a squawk box idea, and this is where the market on close imbalance orders will be. So let's, yeah. I think let's just watch what happens here. 1450 is the market on close imbalance. In the meantime, and between time, see you next time, or something like that. Dave says that every time on his channel. That's pretty funny. There's a few things that's important to think about here to do with trading that I think is important. And I hope you know this, but it's important to know this. First of all, it is absolutely impossible for there ever to be more sellers than buyers on trades in futures. We trade contracts which require a buyer and a seller. There's no pile of futures sitting somewhere, no inventory of futures sitting somewhere which you can buy or borrow or whatever, like in stocks. Now, the way price moves up or down is a different matter. That is aggression. For the price to go up, buyers cross the inside market and lift the ask. Aggression. For price to go down, sellers are aggressive. They cross the inside market and hit the bid, and down goes the price. But never, ever are there more buyers than sellers. It's impossible. So, what does that say to you? Well, if you think about it for a minute, all this buying going on over here and all this flying up over here, somebody was on the other side of every one of those trades. Now, sure, some of them were short covering and all that kind of stuff. No question about it. But there was still somebody on the other side of those trades. And that bears out the old adage that the market goes down to go up and goes up to go down and goes down to go up and goes up to go down and goes down to go up and goes up to go down and on and on. And why does that happen? Because whoever was selling buying from all of these sellers down here, in order for somebody to sell, they had to buy. Someone had to buy. There's not a pool of stock that they could sell somewhere and just have nobody around or buy. Or the same thing with buying. So there's somebody on the other side of all this. And how does that somebody make money? Up she goes. And when all these people have bought, and this guy that was short inventory down here, there's now long inventory up here, what happens? Well, he goes down this way and starts picking off all the stops and stuff on the way down from all the people that thought the market was going to the moon. It's just, it's almost comical. It's so transparent. And it is because it's a zero-sum market. My opinion and as I understand it. If you know something better than that or other than that, please let me know. Drop something in the chat and let's get a dialogue going. That'd be great. Now we've got the political risk, unidentified political risk potential here. So we don't know what might happen with this. Obviously, something's happening here that everybody wasn't real pleased about. We'll see. And I'm not making any political comment about the president or any of those people, but it's a fact. It's a fact of our business, our business place now, our marketplace. So you need to be on guard. I think that it's a really heightened risk environment. And you need to recognize that the primary mission of any trader is to preserve your account. And in this environment, the way you do that is only trade statistically verified, vetted setups and limit your exposing your account to the market risk. And you certainly don't do it without stops. You certainly don't do it because you think maybe something's going to happen. I don't believe. And I'm sure there's people that make money doing that. And I'm not sure if I said it yet today. I try to say it several times. This is my virtual journal, and most of the time I'm talking to myself here. Because the only way I can get what I'm thinking into the stream is this narration. You see everything on my video, no problem. And this is how I'm trading now. This is not certainly my way or the highway, or am I suggesting in any way that this is the only way to be profitable trading or the best way to be profitable trading? And if somebody has a better way, I'm all ears. Please let me know. This is where I am now. So there you go. And we're going to have that market on close imbalance here pretty quick. About 5 minutes. Nothing to get all excited about, I don't think. I don't follow Truth Social or any of those, X or any of that stuff. And I keep my news limited to investing.com, financial juice, and ground news, period. I do read the headlines on Financial Times just to get an overview of what's going on in that regard, but the rest of it has become between social media and this, basically, I don't know what even kind of news you call it nowadays. We don't really have news anymore like when I was growing up. They'd have no problem just spinning lies out one side and down the other, and it's pretty weird. I don't quite understand it, but I don't know how we got there. I don't know how that became acceptable. Frankly, I don't know how that became acceptable. Okay, 5 seconds. Now watch and see if you see something bounce around over here. And I'll spot when they're released. I'll jump over to the financial juice. Well, they are. That's about a nothing burger. Okay. There you go. Another government shutdown looms, and boy, what a crowd we have back there now. Okay, there they are. Not much to write home about. We were in billions of contracts last week. This is 82 million sell side, 461 sell side on the NAS, Dow 30, 34 million buy side, and Mag 7 sell side, 317 million. And these are just like nothing numbers. Last week we were in billions, almost 2 billion. So, yeah. All right. Oh, there you go. That pretty much puts a cap on it. Now we'll just write it into the close, and there you go. One thing I always try to put in here, which is I've got to get my own thing for it, I guess. The most important or critical piece of equipment you got in your trading office, and I mean not even close, is sitting on your side of the monitor. Think about that. We spend all of our time and money and thought and waking hours, a lot of us, monitor this and rack stand that and microphone something else and indicators and trading software and on and on and on. It's all meaningless without that one piece of equipment, which is you. Your eyes take in all that data, your brain processes it all, and you use that to make financial decisions for you and your family. Really important. Be well rested. Be hydrated. If you're on emotional tilt, throw your mouse out the window. If you're, you need to take on board very seriously that protecting your account, if you're trading live, if you're trading a prop thing and you can throw $50 at it, who cares, I guess, if it's just fun for you or whatever, go ahead. But you're not learning anything. If you're actually seriously thinking about learning how to trade, you're never going to learn anything with that attitude, because once it comes down, no matter how long you go, 10 years doing that prop stuff and just, throwing money at it and blowing them up and throwing money at it and blowing them up. Once it comes down to either you finally do pass and get a funded account, or you actually fund account with a real broker with your own money, you better be real aware of risk management and discipline. And I don't mean like it's a problem discipline. I mean like it's, I don't think it requires discipline for you not to, light your house on fire. You know what I mean? I think that's just called being a normal adult, responsible adult. Same way with trading. Your first and absolute mission as a trader is to preserve your account and then to grow it, be a compounding exponentially and be a successful person. If you're approaching trading from a point of view that you have a nice life and you just like going to Vegas or something and gambling, good for you. Have a lot of fun. But most of what I talk about here in my wouldn't be very interesting, because I don't, I didn't take a trade today. I missed the one trade that's set up for me to take. And I don't chase, and I don't do any of that stuff. I don't overtrade. I don't chase. I don't blow up accounts. I'm an adult. I'm a big boy. I also don't go to the bathroom in my pants and do all those other things. That little piece that, So for me, it's not a matter of discipline. It's just it's the same exact thing. That's the best analogy. It may not be very nice to hear, but it's the best analogy I can come up with, And we're going to shut them down here in about 4.5 minutes. So yeah, be healthy, you know, get some exercise. We sit here staring at these screens hours and hours and hours in a day. Any idea what that's doing to, you know, the short focus muscles in your eyes are continually in tension. You need to, you know, go outside, relax, focus down the street, focus off on the horizon somewhere. Go peek over the neighbor's yard, whatever you do. You know, rest your eyes, do some, however you can organize it to exercise and stay healthy and fit. We are every day some of the most highly educated and definitely well-funded people in the world come into the trading desk with one mission in mind, and that's to make as much money as they can. And remember, this is a zero-sum game. When they make money, somebody loses money. It's not, you know, it's not lackadaisical or, you know, irresponsible or lack of discipline that's going to get you anywhere. If you think that they are not strictly 100% focused and disciplined, you need to look into it a little further, I think. Now, I stream every trading morning from 8 o'clock in the morning until 1500. And I appreciate it very much. It's an honor, you know, stop by, subscribe, thumbs up, drop something in the chat. Yeah, be great. And I'll be back tomorrow morning at 0800. I share, by the way, I share the session prices freely with anybody. Let me know in the chat and I'll hook you up with the link. They push from 1700 on Sunday night continuously through 1600 on Friday. So if that could be helpful, that's happy to help. Pretty big range today, huh? About 70 handled, I guess. Boy, look at those levels. Look how those levels hold. Look at this resistance here. Wow, huh? It's amazing. And support here. Support. It's so funny. All right, about 30 seconds here, and it's good night time. 7 hours. It's, well, 7 hours on the stream. Another couple before, and there'll be a few after, but here we are. Have a great night. Thanks for stopping by. I really do appreciate it. Please subscribe, subscribe. That's a big help. Click the notification thing. 5 seconds. And there we have it. Well, have yourself a fine afternoon. What's left of it, wherever you are. Remember to be back bright and shiny at 8 o'clock in the morning for the pre-market. Set up all the book map and the risk neutral methodology, IRTs, statistics, etc. So have yourself a great night, and I will try to do the same. See you tomorrow.